under the Billion Group banner, have quite a lot of developments, and in the rest of our continent, Billion is looking at fastest growing economies in the African continent. So you would look at, we already have opportunities in Nigeria, about 4 different opportunities between Lagos and Abuja. We also in Accra and Kumasi in Ghana, looking at about 3 different opportunities. We're also looking at 2 opportunities in Luanda and Angola. On the eastern coast, we're looking at Beira in Mozambique. We're also looking at Kampala in Uganda. We've got another opportunity there. We are pursuing them quite aggressively. In fact, we're at a point where we've got scheme layouts that we started leasing to retailers, and again, retail focused. We have opportunities, especially in the fastest growing West Coast economies, a lot of commercial opportunities from the international oil companies and international banks. We've seen massive appetite from global investors in the rest of the continent, ranging from private equity into, it could take various forms how we actually, beyond the development stage, because one commitment we made for Rebosis to our investor is that we will not expose Rebosis to development risk. So all these developments cannot be done by Rebosis, but Rebosis is a potential partner once the opportunity is fully developed, and as an exit plan or as an opportunity chasing yield, because those opportunities are coming at far better yields than South African opportunities. 10, 12% yields, and denominated in dollars, and with dollar escalations. Now, there's very few dollar assets with escalations, with income escalations. If you buy a dollar asset anywhere else, largely in the US, because it's economies with low inflation or no inflation, you just have rental reviews after 3 years or 5 years, and you don't have escalation. So something like that, dollar-denominated risk with South African risk, because you've got largely South African retailers, and with escalations matching local inflations, which are much higher than South African inflation. So your escalations in dollars are, that couldn't be a better asset out there. It's a market that's grossly undershopped. So to have centers in those markets is actually quite an exciting thing, especially for those communities in those markets, but particularly for the investor going forward. So we've seen massive appetite. And down the line, I think private equity, we are raising private equity out of the country fairly easy. We've gone roadshows in London, MIPIC in Cannes in France, and the massive appetite that we've seen. In fact, there's another private equity conference that I was part of in Ghana, in Accra, and some of the investors from the US and everywhere else. And it's amazing how much commitments they would give you as a minimum. Some of the guys say they can't invest less than $50 million. That's just their minimum threshold. So it really is incredible opportunities for us in the continent. And this will take various forms. Either Rebosis can invest directly into those opportunities and obviously determine what sort of exposure it wants to have on those opportunities, or dollar exposure that it wants to have on its book directly, or we could house them in a separate entity that would then reverse into the JSE, and Rebosis could be a shareholder into that entity. So there's various ways which we're busy crafting at the moment, which we would put in place down the line. But certainly Rebosis has that right of first refusal to that pipeline because it comes out of Billion stable. So we have about 12 different shopping malls, about $2 billion, multi-country risk into African continent.